Hey traders, Nick Shaheen here looking at Twitter. So I was talking to a couple of friends of mine in the chat room and they mentioned Twitter and they asked is it an all-time high, and I went to a chart to a monthly chart in order to answer that. No, it's not. It was up in the 70, 75, 76, I think. So going into earnings, what's this rally all about? It's up 8% today. It's probably in sympathy to Snapchat. I'm tempted to short it. So I don't have a specific reason other than a long-winded thesis. I'll tell you one thing. So I use Instagram to chat with my fighter friends. I fight for a sport, and that's the only way to communicate because they're all younger. I'm an old geezer. So I stay in contact using Instagram. So I'm on Instagram maybe 2 times a day for like 10 minutes at a time. And I bought like 6 or 7 things in the last, more than that, in the last, I don't know, 30 days. And it's all cool stuff. The ads are not intrusive. They just show up and leave. You just scroll through them. And it's always relevant. Stuff I like. Stuff I rarely need, but stuff I like. And I'm buying. So I knew that Snap was going to have a good up day and on earnings. I don't think that translates into Twitter because I'm on Twitter all day, every day. And I've never clicked on an ad. I have clicked on it by mistake once or twice when they move around things, but I've never clicked on it on purpose. I've never bought anything on Twitter. I've been on it since the beginning. So I don't know if they're going to be happy with the results that Twitter delivers, they being the market. It's not the fact that they're going to beat or not. Snap crushed it. So their expectations have been built up 8% on Snap's crushing. I don't think they're going to crush it like Snap did. So there might be disappointment. So I usually have very few tools. My chart has hand-drawn lines because I use 2 tools. One, my eyeballs to find the levels that matter, and I'm rarely wrong at those. And the volume profile to tell me what's going on. Price is truth part. That's what it is. So let's go to a monthly chart. And then I'll tell you what other tool I'm using, which is the Market Edge tool. So I saw these guys when I was presenting at a place when they were presenting ahead of me. I was like, oh my God, I need this. It wasn't on Instagram. So I reached out. They provide me something I don't have, which is sentiment. That's the intangible that I don't have, and they've quantified it somehow. Magicians there, but you can ask them how they did it. And so now I'm trying to incorporate this into my toolbox. I can't use it 100% right now because I'm not really proficient at it, but I'm getting better, and I'm sharing my progress. It'll be in the latter part of this video. First, so if you believe in the trend line breakouts, this could have more legs. I can say I would probably short it with more conviction at 56 than here, but I would be tempted to buy put spreads in it out in time, $10 wide to monetize, and a disappointment. But then again, I don't have an edge, so I want to use the tool I have for an edge. This circle I drew, and I knew something was going to happen inside the circle, and look what happened. That's a tremendous rally. And I bet you the end result of this video is going to say, this is not an obvious point of entry. You could short it for a little bit, and if you're long already and you haven't trimmed some, you're being piggish about it. And let's see if we can say those. This is my gut statement. Let's see if these guys will agree with me. So they have a backtesting thing, page thing. So this is the default setup, the backtest based on sentiment. The measurement is sentiment from 0 to 10, basically from 1 to 10. So 5 is the mean reversion. So the default is, let's see if we can buy it when it crosses 5 and when it comes back to 5. If you buy it and sell it, how did we do? And we generate, and it looks back to a period of default time. It looks like a quarter here. So 13% active trading returns. And it looks like we had 3 stints, which sounds great. But the S&P did 11 on its own, so this is not so great relative to this. And moreover, the company did 36 all by itself. So if you didn't do anything, you bought it and held it through this whole period, you did much better. So that's not cool. 5 does not work. And I noticed that days above 5 is a lot. Days at 1 is very little. So I started messing around with I need to drop this 5. I need to drop it. So I went too low. It didn't work so well. The best thing I came up with is to get in at 10 and not to leave until it hits, to get in at 4 and not to leave until it hits 10. Extreme optimism, extreme sentiment. Then I hit it. Now I outdid it. So now I have knowledge. I wrote it down. I kept it in a log, and I dated it. If I bought it as soon as it crossed 4, and I held it to 10, I did very, very well. But where do I leave? So I said, okay, so let me see. They have an option to go uptick, downtick. What does that mean? Instead of going by numbers, is to buy the uptick. So wherever it's going, if it upticks, I go into it. If it downticks, I get out of it. And I hit that, and that gave me pretty good results right off the bat. So the uptick, downtick has legitimacy to it. So if it's at 10, this is the point I'm making. If it's at 10, like the last page said, hold it until it hits 10. So when do I get out? It's 10, 10, 10, 10, 10, 10. It says if I sell the downtick, it's a valid thing to use. So let's see. So this is Twitter, the actual chart of the sentiment, which is this light green color up here. If I take price out, this is sentiment. I put price. So if I bought it at 4, this is 921 is when it crossed from 3.4 to 4.2 sentiment, the green line. So if I had bought it right here, and I held it until it hit 10, 10, 10, 10, 10, 10, 10, 10, where do I close it? Right? We're still into it. I should have gotten out of it at the downtick. So if I haven't closed my longs, I'm not being a good risk manager. I should at least book some, leave runners, whatever. So this doesn't tell me go out and short Twitter. It just tells me that I should be careful going into earnings. So the best result usually, the best trades are set after the earnings with conviction. So I'm tempted to short Twitter lightly into the earnings. And by that, I mean like buy a stupid put spread, nothing major, to capture the reversion to the last breakout zone. So I think it will find support around 46, better support around 44, much better support anywhere above 40. So I will buy the dip just like I did with Netflix today because it looks similar. It has support below. It's falling on disappointment. If this happens, then I will buy the dip. So how do I trade it into the earnings? If you're really gung-ho and starting longs up here, then I don't know. You must love the company. You should just buy the stock and hold it forever. I don't have that confirmation from the Edge tool the way I interpret it. I'll put the link to their website down below if you want it. By the way, I don't get paid by them. I used the trial period and I liked it. So the idea that they left it open for me as a thank you for sharing this information with whoever is listening to me. So it's kind of like a symbiotic relationship. So the buying from here means I have conviction that super long term they're going to do well. So I should just hold the stock forever. Or if I wanted to use calls, I'll use calls out next year, wherever I like them. Calls, call spreads, or whatever. That's not my style. I'd rather buy the dip by selling puts or put spreads. That's my style. Or at least buying the calls after the dip if it comes. If it's not, I'm going to miss out on some upside, and so be it. To me, this is what I call THTH. Too high to chase, too hot to short. I don't want to touch it up here. I will buy the dip. I know people who love it are going to be cussing me out, but you're being unreasonable. If you can't stand me saying this, you're too emotionally involved in the stock. That's my opinion. I didn't say it's a crappy company. I said I don't like their ads. I didn't say it's a crappy stock. I said it did great. In fact, I probably suggested buying it long here inside this box. So I'm just saying that this is not an obvious point of entry for somebody to go along with conviction. Moreover, the reaction over the earnings is always binary. It's a crapshoot. We don't know what's going to happen even if they crush it. If you look back, it's probably a mathematical binary event. There's one down, one up. One down, one up. One up. So, one down. It's a crapshoot. It's literally a coin flip. If you think you know, the CEO couldn't tell you. The CEO could not tell you what they're going to do with his or her stock the next day. Nick signing out.